And I think we'll just give them a couple minutes to come on in here, and I start to see some attendees. We had to give them the access by allowing the broadcast to happen. So. Oh, there we go. They're starting. People are starting to show. Get in. Got to go in the passwords and everything.
Yeah, we've been using Zoom or not Zoom, but Skype for about 4 or 5 years, pretty extensively. So we're familiar with all this.
Great. Well, that make it that much easier. And you know how to share your PowerPoint with us,
yes,
right?
I do.
Okay. Yeah, they're starting to trickle in here. If everyone's listening right now, I'm going to let us have a couple minutes more before a few more attendees to show up and maneuver in the process, since it's our first go at Tribe with this. And then I'm going to have Phil pull up his PowerPoint, present for 15-20. And in the meantime, everyone that's listening right now, please feel free to send me through chat or via email your additional questions. We already have a nice list of them, but we'll do our best to accommodate those, and I'll ask them directly to Phil for the group to make it efficient. Looks like we're getting some representation around the country. We got some people from the East Coast, the West Coast, and the Middle Coast, where I grew up. So that's good.
I'm in that middle as well.
Where are you at right now? In Idaho, or?
I'm in Idaho at the moment, but I'm originally from Texas.
There you go.
So it's about as middle as you can get.
Exactly. Well, I'm from Indiana, so I'm kind of out there in that Midwest, or I used to be in the Midwest. I'm out in the left coast now, as my parents in San Francisco here. Well, we'll give them another minute or so, and then we'll kick off here.
So I will try to minimize my comments to allow as many questions as possible.
Okay, yeah, but they're prepared. Everybody expects a 15-20 minute presentation, so they want to hear you. They haven't heard from you. They've heard great things from Mike, and they're excited to hear from you. So yeah, and we got some good questions already. But yeah, don't be afraid to take that time to tell us your story. All right, here's a few more people just popped in. Very good. All right. Well, everyone, this is John Heerdink. I'm sure you can see me. This is my first Zoom thing, so tell me what I'm doing wrong, if you will, after the call. I appreciate the constructive criticism, but I'm honored to have the guys at Hecla Mining Company today. As you know, this stock symbol's on the New York Stock Exchange for over 50 years. Symbol's HL. Thanks I know many of you are invested, and many of you are very interested in what's going on here and how they're advancing their operations in the industry and what's going on in gold and silver these days. And as we've seen that rise, but we have here Phil. Do you go by Phil or Philip?
Phil, it's great.
Phil Baker, he's the CEO of Hecla Mining. We also have Mike Westerlund, that many of you are very familiar with and have heard from before from Hecla, but we got Phil here today. And Phil, if you could just take a minute, give us a little bit of background about yourself and your role at Hecla, and then he's going to pull up a PowerPoint and take us right through that. And remember to please either email me or send me through the chat feature on Zoom your questions. We already got a nice lineup, and we'll do our best to address them.
Okay, thanks, John. Yeah, Phil Baker. I've been the CEO of Hecla for the last 17 years. I've worked for Hecla for 20. Before that, I worked for 2 other mining companies. I started in 1986. So I've been at this for some time. I have worked for companies that have had operations in Bolivia and Papua New Guinea. When I showed up at Hecla, our primary asset was in Venezuela. We were there for a decade. We were the largest gold producer in Venezuela. And so I've had lots of experience in all parts of the world. I'm originally a lawyer and accountant by training, so gives you a sense of where I come from.
Thank you, Phil, and we won't hold that against you.
Exactly.
Anyway, if you wouldn't mind, go ahead and pull up your PowerPoint if you'll share that with us all. If you hear that share screen or.
So host disabled participant share screen.
Well, let me fix that. That's again, there we go. Some nuances that should be.
Yep. Nope. That's great.
All good now. There we go.
Okay. So, I'll talk for 10 or 15 minutes or so. I do want to allow enough time for questions, but, I think there's really three things that I would hope you would take from the presentation. The first is we're in a period of time of unprecedented physical and monetary stimulus, and the result of that is going to be significantly higher gold and silver prices, and those prices could be multiples of where they are today. The second thing that I hope you get is where we mine is important. Not just where we mine, but where the companies you invest in mine is important. It is equally as important as the reserves and the cost structure that they have. And the third thing I hope you get is Hecla, 129-year-old company. We've been traded on the New York Stock Exchange for the past 60 years. I hope that you understand that when those prices rise, Hecla has more than one occasion been the best performing stock compared to our peers, and in fact, the best performing stock on the New York Stock Exchange. And so you'll see a lot of leverage with Hecla. And I run into people all the time that that tell me they've experienced that. And certainly I've seen it myself on 2 occasions in the last 20 years. So let me go to the next 2 slides. Shoot. Here we go. So these are cautionary statements. I have to do this. The things I'm going to say are subject to these cautions. You'll find them in the 10K and the 10Q. Unbelievably, we have to have 2 slides covering that. So let me just start with what everyone has been dealing with and why we're doing this via Zoom rather than in person, and that's the COVID-19. And Hecla responded to that quite early. We, in January, when travel was restricted with China, we said this is a major event. We have a key need to refinance our bonds, and so we advanced our filings, did our 10K early, and we actually went to the bond market the first full week of February. We then eliminated travel. Many of you will be familiar with something called the PDAC. We've been a very active participant in that since I've been here, and we canceled our travel to that. We didn't attend, and we then also went into operationally, how do we run our operations where we can reduce the risk of being affected by the pandemic. So we implemented, before a pandemic was declared, before the state of Alaska required it, we implemented 14 days of quarantine at our Greens Creek operation. We turned that operation, which is on an island, on Admiralty Island, into a fortress where people would come on after 14 days of quarantine in our facility. No one else could come on that island unless they had been quarantined. And we were able to assure ourselves that we've reduced the risk of operating there. And so people then worked there for 28 days, and then they would be off for 14 days. Now that has changed slightly. We now have a 1 week period of time because we've now implemented testing during that period of time. So people get tested twice before they go to the island. So we had this pandemic plan in place, and we executed it. And as a result of that, and as a result of us being considered an essential business in the United States, and in just an important business in Quebec, we essentially have had very little operational impact in terms of the amount of production due to the pandemic. Now, have had slightly higher costs, but they really pale in comparison to the value that we get for the metal. So this is a really complicated slide with lots of information, but I'm just going to focus on a couple of things. First, not only are we the largest silver producer in the United States, we in fact, I think, produce 3 times more silver than the next largest, which I think is Rio Tinto. We also produce 1/3 of all the silver that's produced in the United States, which I can't think of another industry where one company produces that much. The U.S. production is about 30 million ounces. We produce over 10, and the consumption is about 4 times that. So we have a unique position as a silver producer in the U.S., and then we also are the 5th largest gold producer in Quebec. So when you look at this slide and you see all the information on here, just to give you a sense of that we have a number of things, but the key things to focus on when you think about Hecla is Greens Creek, which is a mine that's operated for 30 years. We in Rio operated it, or Rio was the operator for the first 20 years. We've been the operator since 2008. And that asset has generated over $1.5 billion of free cash flow over the last 20 years, 22 years. Year in and year out, it's going to generate roughly $100 million of free cash flow. So it has been the real engine of the company, and it has a long life in front of it. We would expect it to operate for another 15 or 20 years. Casa Berardi, our mine in Quebec, same sort of thing. It's been around for 30 years. We've operated it, owned it since 2013. We've taken it and taken what was a 7-year mine life, and we now have in front of us close to a 20-year mine life. And we think it will operate well beyond that. And it's a gold asset. And then, of course, we have the Lucky Friday, which is a mine that's operated for 75 years. And it's a mine that has, this year will double its production over last year, because the mine, the workforce had been on strike. Now they're back at work. And so we'll see the production double. We'll see it double again next year after we get to full production. And we'll see that production actually increase another 60% up to 5 million ounces in 5 years' time. So we actually will increase the percentage of U.S. production of silver over the course of the next 5 years. We'll get pretty close to almost half of all the mine silver in the U.S. in the next 5 years. And then we have lots of other assets, and I'll be happy to answer any questions people have about that. But these assets, these mines, are really what drives that silver price performance that you see at the bottom. This gives an example of it over a period of time. We could have picked a lot of different examples. We picked this just because of the relevance of the stimulus that occurred following the 2008-2009. The other thing to just mention is we have these long reserves. We also have low costs. And the reason these mines have been in existence for so long is because both their operating and capital requirements are low. And we also have a balance sheet that is quite strong. We have, at the end of Q1, we had $200 million worth of cash on the balance sheet. Majority of the debt that we have is due in 2028. We do have some debt that's due in 2023, but it's less than the amount of cash that we have on the balance sheet. So those are the key things in just a nutshell to say about Hecla. Now I'll go to the next couple of slides. So just the first quarter, one of the things that's unique about the first quarter, and this is a result of the U.S. government declaring mining to be essential business, is that our operations didn't shut down, with the exception of CASA for 3 weeks. And if you think about the other investment options that you have in the space, they're in places where the shutdowns have been quite extensive: Mexico, Peru, Bolivia, and where the outlook, unfortunately, of being able to maintain operations is mixed. So we're in a very good position, and we saw the first quarter perform pretty much the way we expected. There were some things that caused a little bit less revenue in terms of the timing of a ship and some treatment charges and things, but generally speaking, we were along the lines of what we were anticipating, and we see the year being what the guidance that we have given. We've restated our guidance. Let's see, what else do I want to say here? I think that's it. I'll go to the next slide. And the thing I'm just struck by, having worked for Hecla for the last 20 years, is the repeat that we're seeing from the standpoint of physical and monetary stimulus over the last 20 years, which has caused the gold and silver price to increase. So when I joined Hecla, the price of silver was $4.94. The price, today we're at close to $18. We think there's a lot of room for it to run. We think you'll see something similar in terms of the sort of increase in the silver price over the course of the next decade, because this stimulus that you have is so massive relative to anything else that we've seen. And I'm going to stop on this slide, and this is because, John, I think it sort of provides you with a kind of a list from our perspective of the sorts of questions investors should be asking. Where are the mines? What's their mine life? What's their cost structure? What sort of debt and royalties do they have? If they have debt, what's the length of the debt? What's the covenants that are required? Do they have a large land package? I mean, one of the things that I did when I came in is I said, we want big land packages. We want the opportunity for the geology to be in places where geology will allow you to continue to grow and expand the reserve base. So we today have the most reserves in the history of the company. We have the most resources in the history of the company. We have big, large land packages, sort of district scale land packages. And then finally, what sort of capital do they have in the future, and how flexible are they? One of the reasons Hecla's been around for so long is the capital expenditures that we have. There's a great deal of flexibility as to when you have to make those expenditures. So with that, John, I'll let you ask me a few questions.
All right, get myself unmuted. Thank you, Phil. Yeah, it's pretty exciting to see where we are in this. I do agree with your analysis when it comes to the amount of stimulus that we've seen here. Extraordinary. Here's a couple questions that we have here. First one is, as you generate additional cash flow, where will you allocate it? Any thoughts of increasing the dividends? Maybe one of those possibilities.
So the answer is, let me start with the dividend question first. We implemented a number of years ago a dividend policy that increased the amount of dividends as the silver price rises. And it was in a higher price environment than we are today, and the mixture of the production we had was different. I would anticipate that we will reset that. From my perspective, as both as a shareholder and as an executive of a company, from my perspective, I'd like to see those dividends increase pretty dramatically at a lower price level. So it's not a decision though that I make; it's a decision that the board makes. But I can assure you that I'll be advocating for increasing the level of pay to the shareholders when the shares when the silver price rises. In addition to that, we will spend more money on exploration, on capital to improve the assets that we have. And then we have, that slide I had earlier, that map that showed all sorts of different assets that we have. We'll spend money on those assets and advance those assets as well. And we should be able to do all of that. It's going to be an all the above opportunity as prices rise.
Yeah, it's a good position to be in, right? You're looking forward to that.
Yeah, and we're fortunate in that we don't have huge capital outlays in front of us. If you look at quite a number of companies, their future is fundamentally dependent upon making big capital investments in new projects. Ours is not. We have growth regardless from the Lucky Friday. I didn't get to go into the growth that we have at Casa Berardi as we improve the cost structure, and there the growth is in cash flow. But we're in a very fortunate position where we could, basically not spend any significant capital over and above what we ordinarily have spent over the last few years for the next decade.
That's pretty strong. The next question is in regards to your line of credit. The question is, when do you plan to fully repay the revolving line of credit?
Well, what we did, and it's part of the response to the pandemic, is we drew down the line of credit to put cash on the balance sheet to assure ourselves that we could work our way through that. As we've been declared an essential business, as Quebec has recognized the importance of mining and our ability to operate safely, the need for having the drawn line of credit is diminished. So I think you can expect to see it largely repaid in the coming quarters.
Oh, okay. Well, keep a lookout on that. That's promising. Next question is in regards to the coronavirus. And as some are saying, we're seeing some of the numbers in some areas decline. And in particular, I'm guessing in regards to where your mines are. What are your thoughts on when your operations could, quote unquote, return to normal, or are they there? Where
they're there. They're there. The operations are in normal. There are obviously things that we're doing in addition to what we would normally do. But in terms of the production, and generally speaking, in terms of the cost, with just a slight increase, we are at normal, production. It's nothing more that we need to do. We could continue to operate the way we're operating now indefinitely.
Okay. On the roadshow that Mike had in his presentations, he spoke about this amazing boring machine that you guys are working on and bringing into. I believe it's the first is to go into Lucky Friday, if I'm not mistaken, but correct me if I'm wrong there. But two, what do you see as the economic benefits of doing that? Can you give us a little more color on that today?
Sure. So the Lucky Friday is a deep mine, and so we're always looking at how can we increase the throughput without increasing the seismicity risk when you're at those depths. The very bottom of the mine is almost 2 miles below the surface. That's certainly the deepest in the U.S. and just about the deepest in North America. So we've looked at the RVM, remote vein miner, which takes tunnel boring technology as a technique that maybe allows us to get away from drilling and blasting and cut the rock so that we can control the seismicity. And we're testing it in Sweden as we speak. We would anticipate that, that's been slowed down because of the virus. We would anticipate that toward the end of the year or next year that we will bring it to site to test it at site, but it's just a test. But if it's successful, it could see us increase the production, not from 5, we're already going to go to 5 million ounces of silver production at the Lucky Friday because of grade. If we could have this machine, we could conceivably go to 7 million ounces of production. So that would be doubling what we will produce next year, more than doubling. In addition to that, though, we're not just doing that. In addition to that, we're looking at the other way, where maybe we do larger blasts. We blast a bigger component of the ore body, and we can remove the seismicity there. So stay tuned. There's a lot of interesting work that's going on to make the Lucky Friday even more than what it's going to be.
Okay. It is pretty exciting. That machine is pretty fantastic. It'll be, once you get it, I can't wait to see it in operation. I'm hoping you're going to shoot some video of that and get that out to the world. I mean,
yeah, no, we will. Look, it can be, you know, sort of a changer for the industry. But it is new technology. So, you know, it is, and it's a test, and we're not anywhere where we're saying, okay, that is the only way we can go forward.
Okay. Phil, could you do me a favor? Could you unshare this PowerPoint unless you want to specifically drill down to any one of those questions? If I'm happy to, if there's something.
No, that you know, I've made my point.
Okay. I just, for some reason, the technology was limiting me seeing some of the other Q&A on the chat. Let's see. Here's another. How are you looking at, well, this is a commodity issue, so you may not want to address this, but how are you looking at silver prices post-COVID, or if there's a second wave? I'm sure it's probably, if you probably layer in your stimulus view, right?
Yeah, look, the stimulus is going to underlie everything, and it's going to provide this sort of cushion. Having said that, we recognize back in 2009, 2008 rather, you saw a drop in the silver price and the lead and zinc prices. So we sell forward our lead and zinc. For silver and for gold, we actually take cash and buy a put so that we're assuring ourselves of a minimum price. So if we have that volatility that might happen, if we have another second wave, we are prepared to weather that.
Got it. By the way, note that something that's emblazoned in my memory forever is that I think it was right at the last peak of silver, and I happened to be in front of a company here in San Francisco at a luncheon, and they are handing out coins, and that day I believe the price was 54.06. And, you know, which seems so fantastic right now, right? But it wasn't that long ago.
No, I think you'll see prices like that again.
Got it. Oh, here's one that just popped up. Why did you feel the need to hedge the silver prices? What's your thinking?
Well, it really is just volatility, and again, we're not selling the upside. We retain 100% of the upside. All we've done is we've taken greenbacks and we've said we'd rather have protection on the downside than having that cash. And it's a relatively nominal amount of cash that we're using to do this, but it is prudent to make sure that if there is a downdraft, which you have the potential for that with, as you've said, you have a second wave, you have a slowdown in the economy, you have problems in India and China, which are large consumers. You need to protect yourself. So we're doing that. We're being prudent.
Got it. Thank you. And the next question actually is in regards to your debt. It says 7.25% interest seems a little high in this environment. Did the strike or other factors maybe work against you? How do you see that, and how do you react to that sort of question?
Well, I guess I would. There's another company that within the last, about 9 months prior to us doing our deal, they were also same rated company. They did a deal that had more security, and they paid 10%.
Okay.
So the cost of that debt was quite low, and it's very similar to the debt it replaced, which was at 6 7/8. And we reduced the total outstanding. So the amount of interest expense we have is roughly the same.
Okay. Reminder, I know we're at 11:31, Phil. I don't know if you want to spend just a couple minutes. If anybody else pops a question, or if you need to go, let me know. But we still have a pretty decent audience on here.
Nope. I'm happy to stay on as long as people want to hear.
Well, let me ask just again to all the participants of the tribe here. If you, there's two ways to send questions. One is via email to me or text me if you have that number, or just on the chat feature if you're familiar with Zoom. Just send it there like some of you are doing. Since Phil's available, please send us. I know, and if you don't, just let me know that too. But you guys are all on here, so I'm sure you're trying to learn a bit more like me.
Be worthwhile. Sorry to interrupt you, John. Phil, it might be worthwhile to talk a little bit about Nevada. We didn't really get a chance to talk about it in
I
your
was thinking the
presentation,
same
and there's
thing.
lots of changes. That might be worth a minute or two.
I was thinking the same thing.
Thank you.
You know, we acquired. John, would you say something, because I want to switch the screen or to.
Hi.
There we go.
There you go.
So I see Mike all the time. So yeah, we acquired the assets that we have in Nevada in 2018. And, you know, frankly, it did not go the way we had hoped it would go in the short term. But we looked at this when we made the acquisition. We said, we're acquiring 3 key gold assets that all have, these properties all have a history of 1 ounce head grades. These are, you know, this is extraordinarily high grade mineralization. And so it's a system, it's a set of systems that has lots and lots of exploration potential. And so that was the reason we acquired it. We had assumed that we'd be able to run the operation, the current operation they had, and be able to lower the cutoff grade and improve the economics of it. We were not able to do that. So we said, okay, we're going to stop doing that and we're going to study it. And part of that study is working out an arrangement with Nevada gold mines to sell our ore or have them process our ore that is refractory. And so we have a bulk sample of 30,000 tons that we'll be doing over the course of the remainder of the year. And we'll be able to make an assessment of the long-term future of that part of the operation. And at the same time, we're doing exploration on all of the properties, or we will be doing exploration on all the properties. So it's a story that the full story hasn't been told yet. I'd liken it to Greens Creek. You know, this is this mine that has been so spectacular, but it had a bump early in its life, where a speed bump where the mine actually got shut down. And it was shut down for the better part of 2 years while this sort of studying is going on. We're doing the same thing here.
Got it. Thank you. Well, it looks like, so a couple things. One is, I want to thank you for jumping on here today. Is there anything you'd like to leave us with on this call? And, you know, let it be known, Phil, there was a number of folks that well beyond this across the country that wanted to be on here today, just could not hit the time frame. So if at some point, please consider coming back and, you know, and let's get a time that maybe works for them as well. But we had a good crowd here today. So thank you all in the tribe that participated. But if you could just maybe end us with a summation in some way and what you'd like us to do.
Sure, John. I guess the first thing is I appreciate the opportunity to do this. I would encourage anyone that wasn't able to participate to give Mike or I a call. We're happy to speak to any investors of any size, you know, because look, we have 74,000 shareholders. We are the quintessential retail-oriented precious metals company with that many shareholders. We're also the U.S. a U.S. company, and we're, as I said at the beginning, we are really the only company that produces silver in the U.S. So when you think about investing in other companies, look closely at where they're operating. Because I can tell you, based on my experience of being in Bolivia, of being in Papua New Guinea, of being in Venezuela, the risks associated with operating in those countries are really uncalculable as to what the real risks are. And I can assure you that things will happen. There, as a result of this pandemic, there is going to be policy changes that are going to occur. They're going to occur in the United States. They're going to occur around the world. And I can assure you that the rule of law in the United States puts assets that are here in a different place than they are in these other countries. So after you've decided you want to invest in precious metals, then look with the same degree of scrutiny at the assets as well as the jurisdictions. And I'd leave you with that.
That's rational. Actually, one last question popped
Sure.
up, if it's okay, from Dr. Wood here. It says, Hecla has a property in Washington State, not on the web, not represented on the website. Please explain your 1.5 million ounces of was it 2 million ounces on adjacent Fiore's Golden Gate deposit and an idled Kettle River mill of Kinross 5 miles away. What are your plans? What is?
Well, I'm not going to give away any secrets, but yes, we have the dominant land position there. We have a history of operating. This is Republic, Washington. We have a history of operating. Interestingly enough, our chief operating officer operated that Kettle River mine, operated the Crown Jewel project, and in fact has a house in Republic. So we're very familiar with it. It is on the radar screen. It's something where we're able to do something that other people are not. We have, you have ore that may or may not be economic. We have exploration potential that if we're successful, we are in the position to be able to do something that other people can't do. So
fantastic. Well,
stay tuned.
Very good. I hope that answered his question there. I think it did. So again, I want to thank you guys all for joining the tribe, Mike Westerland, Phil Baker. Really appreciate it. Exciting company, exciting times we live in these days. And hopefully we'll all be out to see each other and, some of our formal events where we do our privates. But in the meantime, I think it's a great venue and I really appreciate you being open to taking advantage of it.
Glad to do it.
Thanks
Thanks,
so much.
John.
Thanks, John.
Okay, bye-bye.